Just a few days ago, on July 22nd, 2026, Tesla dropped its second quarter financial earnings and the market reacted with absolute violence. In a matter of hours, the stock crashed by over 12%, wiping more than $140 billion in market value off the map. If you just look at the headlines, this makes absolutely no sense. Tesla just reported a record $28 billion in quarterly revenue. They delivered a massive 480,000 vehicles. By all traditional metrics, they are selling more cars than ever before. But when you actually open up the financial spreadsheets, you realize a terrifying truth. Tesla's core business model is bleeding to death. Today we're going to look at the brutal numbers behind the global EV price war, how the profit margins completely evaporated, and why Elon Musk is betting the entire future of the company on a massive, highly dangerous AI gamble. To understand why Wall Street is panicking, you have to look at the profit, not the revenue. For the last year, Tesla has been fighting a ruthless global price war against Chinese competitors like BYD, Build Your Dreams. To keep their sales numbers high, Tesla aggressively slashed prices and offered extremely cheap financing. When you are out in the market right now looking for a good used electric vehicle or hybrid for yourself, you can literally feel the downward pressure these prices cuts have put on the entire industry. But buying market share came at devastating cost. Tesla's operating income just plunged by 57%. Their operating margin, which used to be the envy of the entire automotive industry, collapsed down to a microscopic 1.4%. Let that sink in. A 1.4% margin. To make matters worse, their cheat code for free money has completely dried up. For years, Tesla padded its margins by selling regulatory credits to other automakers, but because of changing government policies, that regulatory credit revenue just fell off a cliff, dropping 67% to a multi-year low of just $146 million. The safety net is gone, and for the first time in over 2 years, Tesla's free cash flow went entirely negative, burning staggering $1 billion in a single quarter. So you have an automaker burning cash with collapsing margins. How does management respond? Well, by desperately trying to convince the world that they are not an automaker at all. During the second quarter earnings call, Elon Musk made it incredibly clear that he wants investors to grade Tesla as an AI and robotics platform. He essentially framed the physical cars are just hardware vessels for their software. On the call, Musk literally stated, for a lot of people, they're actually buying Tesla full self-driving with the car attached. This is a massive psychological pivot. Management is trying to shift the entire corporate narrative away from the bleeding car business and toward the theoretical future of autonomous cybercabs and humanoid workers. When discussing their new robot, Musk confidently claimed, no humanoid robots today can do generalized tasks without programming, but Optimus will be the first to do it. They don't want you looking at the 1.4% car margins, they want you looking at the $1 trillion potential of a global robotaxi fleet. But building that science fiction future is insanely expensive, and this brings us back to the spreadsheets. The reason Tesla just burned over $1 billion in free cash flow is that their capital spending suddenly skyrocketed by 142%, hitting almost $5.8 billion in a single quarter. Management casually announced that their total capex for 2026 is going to exceed $25 billion. They are dumping absolute fortunes into AI compute clusters, semiconductor development, and robotics production lines. Musk calls it their largest and most exciting period of investment. But Wall Street is looking at the $25 billion price tag and asking a very dangerous question. What happens if the full self-driving Cybercab regulatory approvals take years longer than expected? What happens if the Optimus robot doesn't scale perfectly? As an economist, watching Tesla right now is a masterclass in high-stakes corporate gambling. Their main financial engine is currently suffocating under a 1.4% margin. To survive, they are taking the billions they have left and pushing all their chips into the center of the table on the artificial intelligence and autonomous driving. If Musk is right, Tesla will become the most valuable AI company on Earth. If he is wrong, they just burned $25 billion trying to build a robotaxi while their core car business slowly bled out. Let me know in the comments, do you think Tesla, Cybercab, and Optimus robots will actually take over the world? Or is this just a desperate distraction from their collapsing car margins? If you enjoy this macroeconomic breakdown, hit subscribe and I'll see you in the next video.